If you're holding 1,327 Aster right now, you're probably asking yourself what that stack could be worth by 2026. Could it be life-changing or just a nice bonus on the side? That's exactly what we're going to explore today. We'll take a close look at Aster's current price and market cap, the fundamentals of the project, what makes it stand out in such a competitive market, and of course, we'll run through multiple price scenarios with market cap calculations, so you can see exactly what your 1,327 Aster might be worth a couple of years from now. But before we continue with the video, if you're looking for a reliable place to trade crypto, I recommend BTCC. They've been trusted by millions for over 14 years, and right now you can grab a 10% deposit bonus on your first deposit over 500 USDT, plus unlock secret community rewards and extra bonuses of up to $10,055 per user. On BTCC, you can trade 300-plus crypto futures with up to 500x leverage, and even access tokenized stocks and Forex, all with no VPN or KYC required. Use the link in the description to sign up, claim your bonus, and start trading today. Now let's dive into Aster. At the time of recording, Aster is priced at around $2.23, with a market cap of about $3.7 billion. That positions Aster as a mid-cap cryptocurrency, meaning it's no longer an unknown small cap, but it's still nowhere near the giants that dominate the top of the market. For your personal stack of 1,327 Aster, that works out to a current value of just under $3,000, roughly $2,972 to be exact. That's the baseline today. The bigger question is, what could happen next? To understand that, we need to look at what Aster actually is and why people are paying attention. Aster powers asterdex, a decentralized exchange that aims to combine the best of both worlds, the performance and advanced features of centralized exchanges with the transparency and security of decentralized finance. Most DEX today struggle with slippage, shallow order books, and sometimes clunky user interfaces. Asterdex is trying to change that by offering things like perpetual trading, multi-chain support, and even hidden orders where trade direction and size are concealed until execution. These kinds of features are designed to make trading smoother and more secure, while giving traders more confidence that their strategies won't be front-run or exploited. Another unique part of Asterdex is its focus on multi-chain compatibility. Instead of being locked into a single blockchain, Aster supports trading across Ethereum, Binance, Smart Chain, Arbitrum, Solana, and others. This is crucial because the future of crypto is almost certainly multi-chain. No one blockchain will dominate everything, and the projects that can connect liquidity across multiple networks will likely win. By offering seamless access across ecosystems, Asterdex positions itself as a platform that can serve traders wherever they are. So what role does the Aster token itself play? Quite a central one. It's used for governance, which means holders get a say in how the platform evolves. It's tied into trading fees. So as volume on the exchange grows, the token benefits. It can be staked for rewards, used as collateral for leveraged trades, and integrated into yield-bearing strategies. That means Aster isn't just a speculative token with no use case. It has multiple drivers of demand baked into its design. But with all of that said, Aster also faces its share of risks. For one, there are many competitors in the decentralized exchange space. Projects like DaiDDX, GMX, and others are already well established with active user bases. For Aster to succeed, it has to differentiate itself meaningfully, and that comes down to execution. Another risk is tokenomics. Aster has a maximum supply of 8 billion tokens, with about 1.65 to 1.7 billion currently circulating. If token unlocks flood the market, or if supply is too concentrated among a few large holders, that could put downward pressure on price. And of course, we can't ignore regulatory risk. Perpetuals and derivatives attract heavy scrutiny, and if regulators crack down on them, Aster could be impacted. With that foundation in mind, let's break down what your 1,327 Aster could be worth by 2026 in different scenarios. In the conservative case, let's imagine Aster grows steadily but doesn't explode. Maybe it secures more users, improves liquidity, and becomes a decent player in the space, but not a dominant one. If the price climbs to $4.50, that would put the market cap at about $7.5 billion, roughly double where it is today. At that price, your 1,327 Aster would be worth about $5,971. That's a solid doubling of your investment without requiring the project to take over the entire market. In the bullish case, things start to heat up. Let's say asterdex really gains traction, volume surges, and it positions itself as one of the leading decentralized platforms for perpetual trading. In this scenario, Aster could reasonably reach $10 by 2026. That would give it a market cap around $16.5 to $17 billion. Your 1,327 Aster at that price would be worth $13,270. That's more than a 4 times increase from today's value, and it shows the potential if adoption goes right. Now let's consider the moonshot case. If asterdex becomes a major force in decentralized finance with strong liquidity, institutional integrations, and a dominant position in derivatives, Aster could climb to $20 per coin. That would put its market cap at over $33 billion. In that scenario, your 1,327 Aster would be worth $26,540. That's nearly a 10 times return from where you are today. Ambitious, yes, but not impossible in a bullish market cycle where DeFi platforms capture more and more of the trading activity that used to be centralized. To put these numbers in perspective, a $33 billion market cap would place Aster among the top decentralized protocols in the world, competing with giants that are already household names in crypto. It's not a guaranteed outcome, but if Aster manages to innovate, deliver strong security, and build trust, it's a level that can be envisioned. Now let's dig a little deeper into what could drive Aster toward one of these outcomes. Adoption is the key. The more traders use asterdex, the more demand there will be for the token. Features like hidden orders, yield-bearing collateral, and cross-chain support give it tools to attract both retail traders and larger players. Incentives such as staking rewards, airdrops, and community programs can help build loyalty and keep users active. Partnerships with liquidity providers or integrations with other DeFi platforms could also boost usage significantly. At the same time, execution risk is very real. We've seen many promising projects stumble due to poor security, failed tokenomics, or lack of consistent development. If asterdex suffers a hack, an exploit, or simply fails to capture enough market share, the token price could stagnate or decline. That's why risk management is so important for investors here. But if we look at the broader trend, decentralized derivatives and decentralized exchanges are still in their early stages. Most crypto trading still happens on centralized platforms, but that's slowly changing. Every new generation of traders is more comfortable with DeFi, and the desire for self-custody has only grown after past centralized exchange collapses. If that trend continues, platforms like asterdex stand to benefit massively, and by extension, so does Aster the token. So what does this mean for your bag of 1,327 Aster? Right now, it's worth just under $3,000. In a conservative growth case, it could double to about $6,000 by 2026. In a stronger adoption case, it could climb to over $13,000. And in the best case moonshot, you'd be looking at $26,500. That's the range of realistic outcomes based on market cap math and adoption potential. The key takeaway is that Aster doesn't need to reach the absolute top of crypto for you to make solid returns. Even if it only doubles or triples in price, your bag grows meaningfully. But if it does reach its ambitious goals and carves out a dominant position, the upside could be much larger. At the end of the day, crypto is about weighing risk and reward. Aster has strong fundamentals, real utility, and ambitious plans, but it also faces real risks from competition, regulation, and tokenomics. If you're holding 1,327 Aster today, you're positioned in a project that could deliver anywhere from modest but solid returns all the way to life-changing gains, depending on how things play out by 2026. So the question is, which outcome do you think is most likely? Will Aster settle around $4 to $5, climb to 10, or shoot toward 20? Let me know your prediction in the comments below.